In this video, traders, we're going to look at accepting and dealing with risk that you cannot control. Stay tuned. Hey traders, a very warm welcome to you. Thank you for joining me, and if you're a long time subscriber to the channel, I appreciate your support, all your likes, shares, comments, questions, etc. I know a lot of you guys have been here a long time, so it's much appreciated, and hopefully your trading is being helped by some of the videos I put out there. I don't claim to know everything, far from it, but if you can take one or two little bits that help you, then that's a win from my perspective. It's a win for you too. Okay, so let's have a look at this question. So this question came about when literally the other day I just got caught out by one of Donald Trump's tweets. Now, if you're watching this years later or months later, Donald Trump has been tweeting about trade wars with China. We've had tweets coming out with all sorts of stuff. And basically, forget about who it is or what it is, that's irrelevant. There's like a binary event that you can't control. Okay, you can literally cannot know when a tweet is going to come or a headline risk is going to come, upside or downside, could be positive or negative. And you accept that, and this is the point of this, is that, you know, I was in this trade and I'd taken this lovely short position. It was a great entry. Everything was just so perfect with the trade. Timed it right, ridden the trade down. It was very, very close to my exit. I wasn't at the screen actually at the time. I kind of left it, put my limit in. I'd adjusted my stops and stuff. I was happy to say, right, you know, that's fine. What will be, will be. And then ultimately, you know, came out and I saw a big spike up in the market. I actually got alerted to the price. So I was like, what's happened here? I saw that there's a tweet come out and actually spiked through my stop and stopped me out. And it was unfortunate because it was going to be a big winner. But I kind of thought, yes, that's annoying. If I stood here and said I wasn't bothered by it, I'd be completely lying, and anyone who does is lying to you too, guys. You know, there's a profit there, and it was so close to the profit, and then he decided to tweet at that moment in time, which spiked the trade up and then stopped me out. You know, how could you not be annoyed by it? However, I got to thinking, I thought, okay, how many times have you been on the right side of that? Well, a few as well, and I managed to catch some kind of when I've been at the screen, and I've caught some momentum play. So on balance, am I up or down? It probably about even after that one. So is it that much of a problem? No, it's not. And then I got to thinking a little bit more objectively, I was actually driving at the time. I was thinking, well, do you know what? This is a great thing to share with you guys as well, is that, you know, how we accept and deal with this. You know, I went into that trade accepting that there would be or could be some headline risk from the market, i.e. Twitter tweets. I had my stops in, I had stuff in, but there's still that risk that we can't control. You know, you can read the market structure perfectly, as I've done with that trade. It was a great trade, or it would have been a great trade, but ultimately you cannot control something that happens. You can't control that. And so I think, you know, on this drive and thinking about it, thinking, well, you know, there's always this case. If you're trading crude oil, you've got this issue where there could be some sort of attack on a refinery or something. Whatever market you're trading, there's always a headline risk. Now, admittedly, at the moment, and I'm filming this as more headline risk than perhaps usual because of the nature of the way the news is released and the Twitter and this kind of trade war thing and what's going on. Admittedly, that's given. But I still make the decision to get involved with the market knowing that there is risk. And the way that I quantify it is by saying, okay, if the risk is 50-50, i.e. in my favour or not, it could have been a negative headline, it would have gone straight down and filled me out. I've been very happy because it's been a last little squeeze. If it's 50-50, then I'm accepting it. I'm saying, okay, there could be positive news, there could be negative news. It feels like it's 50-50 to me. And so, hey, it's either going to benefit my trade or hinder my trade. If I'm happy to accept that, then I take the trade. Now, sometimes you're in a trade where you have unacceptable risk you can't control, and it's not actually 50-50, it's like 80-20, and so you avoid those. And what are those? Those are things like if you're trading a stock that's potentially a takeover target, or if you're trading something that's have news on it that's got a binary event of it not happening, and if it not happens, it's probably gonna halve. If it does happen, it's only going to add 10%, for a rough example. So you get those situations where sometimes the binary event has an asymmetrical risk reward, so you don't take it. So if you're shorting a stock that's potentially a takeover target, don't bother, because the binary event of a bid coming in can just completely rip out your trade. So yes, that's a different market and different kind of way of looking at things, but the point is, guys, is that you've got to accept this headline risk to the market you're trading. If you believe that it's 50% bearish, 50% bullish headline risk, then you're prepared to take it and you're prepared to take some of the swings that come with it, then I think from my perspective it's fine. You go, you know what, I'm taking this and I'm making a decision as a trader and I've decided to take the risk. Now, if it's slightly different, then you might want to take the risk. But the other thing as well, guys, is the amount that it moves. You know, I knew there's not moving at more than 100 points to the market. Okay, occasionally we do, but in this terms of initial spike. So worst case scenario, let's say I get slippage by that. Is it going to kill me? No, it's not going to kill me. Nothing bad's going to happen. No one's going to die from it. However, if we had an event that was binary, it was 50-50, maybe it was 1,000 points or 1,000 pips if you're trading FX, then you know you might not want to take that risk. So going back to the initial point, guys, you look at it and say, okay, what's the headline risk? Or what's the risk I can't control, i.e. headline risk? What's the likely move on headline risk? Okay, X. Now, what's the likely direction? Well, it's 50-50. And then you decide whether you want to take it or not. And you accept when it happens to you positively or negatively. And if you pre-frame that, then actually when it happens, you just shrug your shoulders and go, you know what? It's literally just bad luck. Sometimes in trading, there's luck there. And that's literally just bad luck because it came out when I was in the trade and it went against me, pinged me out. It's good luck, came out in the trade and went in my favor and I managed to get my limit. So if you accept that, what the problem you have is when you go into a trade and you don't think about this and you go, well, oh, you know, I didn't realize Trump really screwed up my trade. Well, you knew that that was happening at the moment. You knew that there was a slim chance of it happening while you were in a trade. So why is it a surprise when it's happened when you're in the trade? You see what I'm saying? If you pre-frame it, it's way easier. And that's just an example, by the way, the Trump tweeting thing. Could be anything that's a kind of a risk that you can't control. But as long as you are aware of it and you're aware that it's going to happen and it could happen while you have a trade on, then it becomes much easier and much more comfortable to be able to trade with that risk that you can't control underlying under that trade at any one time. So it's risk management, guys. As always, I always say at the end of the videos, you keep the risk management. It's one small thing in risk management. Yes, it's not stops and limits as we normally talk about, where we put our stops, where we put our targets. And this extra little thing really comes into play because often if you don't accept this and it happens to you and you feel like it's bad luck and it's this and that, it can create, you know, lose your confidence, lose your mojo a little bit. You don't want that. You just want to say, listen, didn't quite get there, it's bad luck, move on, next trade. Am I still happy with the risk? Yes, I am. And that's the best way, in my opinion, of being able to kind of deal with and handle with risk that you can't control, i.e. the price moving against you normally. All right, guys, take care. You know what I'm going to say, keep the risk managed. Thanks for your support, subscriptions, etc. Bye-bye.